Okay.
With an educational video on the basics of candlesticks. This is a part of our Stock Trading 101 video series. We will successively delve deeper into more complicated and technical stock jargon, strategies, and stock chart analysis. Let's get started. The most basic and essential element to understanding a stock's fluctuations and price movements is being able to read its charts. Nearly all charts have some type of pattern associated with them. The Japanese discovered this during the 17th century when documenting price movement in the rice market and used a series of candlesticks. It became evident that patterns emerged and they were able to better grasp which direction the market was heading. Let's start off by taking a look at a single candlestick and identifying its individual parts. So this is an image of a candlestick. It's basic in its form and it tells us basically four things: the open, the high, the low, and the close for the day. There are different colors as well, and we'll go over that later, where this one is white or considered hollow. There is black and red. As we can see here, we've got the real body. This makes up the majority of the trading day. We also have the upper shadow, which represents the high, and then the lower shadow, which represents the low. So when the candle is white, the open is at the bottom. It indicates that the stock price opened here and it closed here, right at this line. Let's go ahead and take a look at a black candle. Now the black candle here is just a little bit different. It also has an upper shadow, a lower shadow, the real body, but the open and close are reversed. So it opened here at the top and then it closed at the bottom. Now this represents that there was a lot of selling pressure throughout the day. Let's take a look at a full chart to better describe the different types of candles. BASI, Bioanalytical Systems Incorporated. This is just a random stock chart that I pulled. It is from stockcharts.com, and I just wanted to find something that would kind of showcase an array of different types of candlesticks. You can see here you've got the hollow or white candlesticks, the red, solid red, and black candlesticks. And then the formation of the candlestick also has a specific meaning, and it can indicate a couple different things. So it's really helpful to understand what these are telling you. The white long candlestick here shows that we opened here at the bottom, and then it went all the way to the top here. This is the high of the day, and then came back down. Let's just put this on the inspect so we can see it a little better. So it reached all the way up here and then pulled back at the end of the day. Not necessarily, but it ended up closing here right at 227. So let's go over long versus short candles. The longer the body, the more intense the buying or selling pressure. So as you can see here, red, we've got a lot of selling pressure here. Versus over here, we've got white or hollow, and there's a lot of buying pressure. As you can see, there's an upward trend going here. But if the candles are very small, it shows a consolidation period. As if we come over here, and this over here is starting to form somewhat of a consolidation, because it could go either way. The market really hasn't decided yet. Let's take a look at black versus white and what red means as well. If the stock closes higher than its opening price, the candle is hollow from the base up, as we can see here. So, it opened here, and then there's a lot of buying pressure and closed up here. So we've got a nice long white candle. Now the black If the stock price closes below its opening price, the body of the candle is filled black. So we see here that it was open at the top here and dropped down and came back up, but we've got a black candle here because it closed below its opening price. And we have also stock charts likes to color code them with red and black. And these are also significant. So basically for black, what they say is if the previous day's closing value is less than or equal to the current day's closing value, then it will be filled black. So what it's saying is that the previous day, if we were to look at just this candle here, the previous day closed here, right, just below. Let's take a look. Right here at 244. 45 it looks like. And we opened here, up here at 263, but there was a lot of selling pressure and it turned that candle black, but it also closed above the previous day's closing price. Stock charts also fills in a candle red if the previous day's closing is greater than the current day's closing candle, and it's going to be filled in red. So as we can see here, we have it closed right up here at 242, and we opened here, came down with some selling pressure, and then came back up. But because it closed below the previous day's closing price, it's filled in red. It just, at the end of the day, it had buying pressure to come up, but the reason that it's red is because it closed below the previous day's closing price. Same with here. So the previous day closed right at 240, and the next day we opened here at 240, 239, it looks like 240. And we had some selling pressure. Came back up to the low and then back up to 239 it looks like, and closed for the day. But because it closed just underneath the previous day's closing price, it's filled in red. Let's talk about the long versus short shadows as well. If we take a look here, the long upper shadow, or the wick, right here, we can see that a long upper shadow and a short lower shadow indicates that buyers were dominant in the trading session, but the sellers began to dominate after, towards the closing session. So we can see that we had a nice long white body, and it came all the way up to a high here, looking at about 255. And then at the end of the day there, the seller started to put pressure and brought the bid all the way down and it closed at 227. Conversely, we can look at a candle that has a long bottom wick, and what that shows is that we had a lot of selling pressure at the beginning here throughout the day, and then towards the end of the trading session we had some buying pressure and it pushed that body all the way up to the top here, and we have a nice long wick. But it still shows that because it closed just at the previous day's closing price, it's still red. Alright, so I understand that this is a lot to throw at you, and it takes a second to get accustomed to the way that candlesticks are formed and what they mean, and how to identify the different types. So let's just do a quick recap. We'll break down the basic candle, And we have the wicks, the upper and the lower, which are also called the upper shadow or the lower shadow. We also have the body here. Then there are three different types, at least for stockcharts.com, where they represent a black candle, a white or hollow candle, and a red candle. If you have a long body, depending on what color it is, it can show or illustrate the significant buying or selling pressure throughout the day. If we have a upper wick, a long upper wick, what it signifies is that it opened at the bottom here around $2, had significant buying pressure all the way throughout the day, hit its peak, and topped out at $2.50, and then the seller started to set in, and just at the close, it pushed the stock right back down to $2.29. Now, if we take a look at a lower long wick or shadow, we can see that we opened up here, we hit a high, brought it back down, came all the way down and hit a low at 2, and then we had some significant buying pressure towards the end, and we closed just underneath here, right at 216. Now for a shorter candle, we see that there is a consolidation period. And what this signifies is that the market could go either way. It's basically a balancing act, and investors are not exactly sure which way the market is going to head, or the stock price. So it shows it's a sign of indecision. Now for the different colors, we already went over. We have the white candle, where it opens at the bottom, comes up to the top here, and closes. Stock chart says that for it to be a black candle, if the stock closes below its opening price, the body of the candle is filled black. And if the previous day's closing value is less than or equal to the current day's closing value, it'll also be filled in black. So like we see here, closing price here was right at $2.47. The next day, we see that it opened up here at $2.61. Yep, and brought it back down. We hit a low at $2.40, but then it closed right at $2.48. So it hit just above, or it closed just above the previous day's closing. And for the red candle, we see that the previous day closed at $2.48 right here, but we had an opening here at $2.59, it looks like, and throughout the day there was significant selling pressure, and it came down, and it closed the day at $2.46, which is right below the $2.48 that closed the previous day. I hope this clarified some of your questions about candlesticks and how they're formed and interpreted. Again, this is basically an overview of the candlesticks, and we'll be covering different candlestick patterns and strategies that help determine the direction of the market. Don't forget to stop by gotmomostocks.com and check out our daily updates and stock picks. You can also find us on Facebook and on Twitter. Thanks for watching, and keep an eye out for the next video in the series.
I've been once inclined to tell you part of my spine, part of my shine comes from the distance you are from a star when you compiling your wish list.